All right, getting ready. We are so ready to do this. Yeah, we're ready to do this. That's right. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. This is my live stream. It's about personal finance, investing, stock market, the economy. You need to know what's going on. A truly educated view of the world in terms of politics, economics, personal finance, all so that you could potentially make the best investment decisions for your and your family's future. That's what the show is all about. I should say that more often. I should really remember these quick intros. Big reversal day today. Stocks had their biggest day since 2020. Up day. Crypto up big time, and this is really up on solid news, the kind of news that I think crypto investors have been hungry for, have been yearning for. So we've got some crypto news, we've got some stock news. Oil plunges, something we've been talking about. I said right here on the show, time to take some profits on some of these big gains in the oil stocks because the stocks went parabolic. We spoke about that on Monday, and I hope you did a little trimming and didn't get overly attached to those. Okay. By the way, I have not committed the funds that I raised to anything as of yet, just raised some cash. And let's roll the intro. Couple more things to talk about. Here we go. All right, welcome back. If you're joining me just now, we're just getting started. Just so you know, we're live streaming all over the world. It's pretty cool to say that. It's a cool feeling. We're on Facebook, LinkedIn, Twitter, and YouTube. So we are talking about the markets today, the reversal day. So just to put it in perspective, we had a really big rally in the markets today. Definitely something to write home about. Dow up 2%, Nasdaq up almost 4%. The other day it was down almost 4%. So let's not get carried away. By the way, an index like the S&P 500, Nasdaq, and Dow, you can't invest directly into an index, but you could invest in a security that tracks or mimics an index. And while you're watching, whether if you're watching live or in replay, if you have any questions, comments, I'm not really supposed to say comments. I know it's silly. So if you have any words of wisdom or words of encouragement or questions, or you just want to say hi, say so in the comments. I'd love to see you. I'd love to interact with you. Let's do some interacting, okay? And we'll get into it. So I see a couple of people have joined us mostly from Facebook. There's always a few people from LinkedIn too. The technology doesn't show you everything, every person who's out there. It's just, but it is pretty close. So let's talk about a couple of things real quick. I want to put you up on the screen. Let's go to the lead right now. Okay. The lead today is the price of oil down $13 a barrel, down 10.5%. It was a little bit lower earlier today, but oil on Sunday popped up to Sunday night 130 plus per barrel for WTI crude. WTI is West Texas Intermediate. There's two kinds of oil. Think of it like this. There's our domestic oil that we produce here in the United States. That's WTI West Texas Intermediate. Even if it's produced in Pennsylvania or California, we just call it WTI. And then there's the other oil, which is Brent, from the Brent Sea, even if that oil comes from the Middle East or Russia. Okay. So domestic oil hit 130. That's the WTI. So, excuse me, you should know about that. So my screen is blinking. I don't know why it does that. So anyway, let's go on. So let's go on about oil. So it's a slippery slope today. The oil down 10%. Get it? Slippery slope. I don't have my sound machine with me to go, but oil is down pretty good today. And Why? It got up to 130 on Sunday night, when the war in Ukraine was, intensifying, with between Ukraine and Russia. And then yesterday, Tuesday, President Biden announced, with the support of both parties in Congress, we are banning imports of Russian crude and other energy products. Just so you know that we get a very small percentage of our crude oil from Russia. The sting turns out it's probably not as bad as people make it out to be. What followed is oil had one of its biggest down days we've ever seen, down over 10%, almost 11%. It's not even more earlier in the day. So you put it all together, when oil goes down, which means the AAA national average price of gas, which is about, I think it's 424 or 425 today, could actually drop maybe to the 4.15 to 4.19 by the weekend. That would be pretty cool. And if people start to see oil prices go down, investors will be, and consumers in general will be, more supportive of the energy ban on Russian energy imports, on the ban on Russian energy imports. You know, Putin is like he's like Hitler, and he's just going to destroy any city at all costs. I mean, literally, he will level an entire city and kill all the civilians just because he's always in the conquering mode, I guess. But you can't capture the hearts and minds of the citizenry. And the only thing worse than an angry Russian, I guess, is an angry Ukrainian. And Ukrainians have a lot of revenge to get for themselves against the Russians. So it's a really just brutal, brutal thing. So I don't want to get too into the geopolitics. But good afternoon from my friend Nick. Good afternoon, Mitchell. Always educational. Keep up the great work. Thank you, my friend. Jeffrey Jacobson, PhD. Dead cat bounce. Okay, so Jeffrey, you bring me to the next thing. Okay. Is this the real thing? Oh, I should have used the line from Queen, a quick snippet from Queen. Is this the real thing? Or is this just fantasy? Little high, little. I saw Bohemian Rhapsody not too long ago, and great movie, by the way. Sorry if I just hurt your ears with my really bad singing. So let's go to the next story then, which is U.S. markets. Okay, let's pump it up. Okay, so the Dow up 2%, up 653 points. Keep in mind, yesterday it was up almost 600 points, only to be down by about 180 points yesterday. And last Friday, the Dow was up 800 points, and then it got repealed. And that's why I always say, I really can't stand these really big up days because they get repealed too quickly. You know, you have the up day, and then it's followed by the big down days. So I don't particularly like those days. I'd rather get a smaller variance of volatility that we could build a solid trend on, as opposed to big ups and big downs. Okay. Excuse me. Nasdaq had a huge day, up 3.6%, up 460 points. As you can see, S&P up 107, up 2.5%. Gold was off a little bit, down 43, right at the 2,000 mark. So a little bit of its safe haven status is coming off. And that's the thing with safe haven assets like treasuries and gold. When investors run into these for a safe haven trade, they're volatile, and the safe haven status doesn't often, or the safe haven uptrend or uptick often doesn't last very long. The 10-year treasuries, you could see, up to 1.944. So we're back to worrying about inflation, back to worrying about the economy. I don't mean inflation just because of oil and the war in Europe. Okay, let's keep going. The Russell 2000, building on its gains yesterday, the only major average that was up yesterday that I follow, it was up another 2.7% today. Okay, the Russell 2000, by the way, that's the index that people need to follow. that they don't. It's a small cap stock index of 2,000 companies, and I think you should follow it. It's, we will follow the large cap indexes. Okay, Nasdaq, right? Dow, S&P. So let's talk about this. Is this a one-hit wonder, or is it a dead cat bounce, the way Jeffrey says? Right now, I'm in Jeffrey's camp. I think it's just part of the volatility. We saw the Dow down about, holy cow, this news, just breaking news, folks. I'm going to break some news for you right now. Amazon announces 20-for-1 stock split and a $10 billion buyback. Wow, that is that's big. That's pretty big news. That is blow-away news. 20-for-1 stock split. Holy cow, that is just going to be maybe that's a stock we could see enter the Dow. And Amazon is up almost 8.5% after market trading. That is significant, and it's still, by the way, way off its high. It's almost 3,800. So it's still not far from its year low, which I think was either yesterday or the day before yesterday. So big news on Amazon, 20-for-1 stock split, and let's get back to what we were talking about. Okay, well, this is exciting. This is going to be big news in the morning. It's going to be all that anyone could talk about. All right. I'm just thinking that when I started my own investment firm in 2005, if I just put all my money into Amazon and just gotten like a regular, everyday, average job, I probably would be a lot better off today financially. But whatevs, guys. It's if I didn't need cash flow, there's so many things in life we could all do, right? Like, I'm like the rest of you, right? Anyway, let's get back on track. All right. So is this a dead cat bounce? And my answer to you is, I think it's a dead cat bounce because this is just continued volatility. Now, things in Ukraine could settle down. President Volodymyr Zelensky of Ukraine said he's willing to negotiate and compromise, but he's not going to give up any Ukrainian territory. The Russians are not going to give back any territory that they have claimed unless Putin is willing to go home, a total effing loser in the war, and just started it for basically nothing. All right. So it's tough to say where they meet, but when the parties are at least willing to talk and say the word negotiate, that is taken as significant. Maybe temperatures cooled a little bit, although from what I understand, the Russians bombed a children's hospital, which is just like, the most horrendous thing you can think of, bombing a children's hospital. So look, we'll see. So we've had these bounces before, and even when we were at the peak of COVID, you remember when the Dow was going down a lot, the major averages were going down a lot. We still had some pretty big bounce days. It all started to me on the Friday after Thanksgiving when the Dow was down about 1,000 points out of nowhere. And ever since then, we've been having these massive moves in the major averages. And I think it's mostly because liquidity is being withdrawn from markets by the Federal Reserve. We were at the end, very close to the end of fiscal stimulus. That's when Congress spends money, sends out stimulus checks, things like that. And even though the Fed at that point around Thanksgiving didn't start to reduce their liquidity operations into the market, just knowing that they would was enough to make the markets look like they're not trading with a full liquidity, a full participation rate of investors. And I think that's what's happening now. I think a lot of people backed off from the market. They're staying on the sidelines. It didn't take a whole hell of a lot to have this up day in the major averages. Some short covering, put some money to work, a lack of sellers because sellers for the time being look like they've exhausted themselves. And you get these bounces, which I wouldn't be surprised if it continues into tomorrow, especially because of the Amazon news. Amazon is just going to be up so much, it's going to pull up everything else. Alphabet already announced a very big stock split from their last earnings report as well. Alphabet is Google, if you don't know. And when you get these $1,000 plus stock prices splitting like that, it adds to a lot of bullishness. Even though we all know that a stock split doesn't really mean anything logically, but psychologically, I think it means a lot. Okay, so I know we like to just work in the world of logic. We talk about the stock market, so I'm definitely in the camp of dead cat bounce. Let's take a look at crypto. Okay. Um, the big news today on crypto. Let me just get rid of that. Big news on crypto. Bitcoin up 8% after Biden announces executive order on cryptocurrencies. Now, there's going to be a public comment period for the next 60 days. The Federal Reserve, the Treasury Department, Office of the Comptroller, they all have to get together and decide what they want out of crypto in terms of will they regulate the market. Okay, most crypto is traded outside of the United States, so it's really hard to regulate what investors do outside of this country. Our regulators powers end at the shoreline. So, but they want to do something. It comes directly from the president, and he was pretty direct about it. When you hear the president of the United States talking about crypto and Bitcoin and all the other cryptos and what about a framework and regulatory uh, framework, whatever, it's it's pretty bullish. And Secretary Yellen is involved. The SEC chairman, the Securities and Exchange chairman, is Gary Gensler, and he actually taught about crypto um, at I forget one of the major colleges. Was it Dartmouth? Maybe I forget. He was like a teacher, and he's considered a subject matter expert when it comes to when it comes to crypto. So there people thought that crypto would have a good shot of being of gaining a regulatory framework which would make it more legitimate, attract more investors, which would make the overall pot of value of crypto go up. Uh, so that's what people had expected when Gensler was brought in as SEC chairman. Uh, and now it looks like it could happen. So, what else is the big news? Okay, let's talk about upgrade on the downgrade. Yesterday, we spoke about things to do in a down market, and one of those things was upgrading the downgrade. So, let's say you have a not so great bank stock or a bank stock that you think, I bought it because I thought it had a lot of upside. All the bank stocks are down, so maybe I should sell that, take a tax loss on it if it's in a taxable account. But it's not tax advice. I'm just giving you as a trading example strategy. And maybe you'll upgrade into one of the 3 or 4 top, one of the major banks, because those you would expect could recover quicker, and maybe they'd be a better place to be if the economy really got rocky. A lot of people worry that with oil, the price of gas where it is, a lot of people are worried that that could send us into a pretty bad recession. The expert, the analysts, top Wall Street analysts, agree that we won't go into a recession, even though gasoline is over $4 for regular per gallon, because employment is still so strong. People have gotten raises, and the economy just has a lot of momentum. I don't know where a gallon of gas has to go to throw the U.S. into a recession. Is it 4.5 per gallon? $5? I'm talking national averages. I know that it's more than $5 in plenty of places, but would the national average have to go to $6, $7, or $8 a gallon? And then what do governors do about it? I know that, like, the governor of New York, Governor Hochul, is talking about dropping New York State taxes on gasoline, which could make it maybe a little bit cheaper, just a little bit. But if our she is up for a re-election soon. So, well, I should say election soon. But if she can make consumers a little bit happier, maybe that increases her chances of winning the governorship. Okay, she became governor when Andrew Cuomo stepped down. Okay, Scott, how are you? And Scott says gas will be 8 per gallon. You'll see almost 7 in California right now. But yeah, I mean, it's all whatever you do, it's always highest um, in California. Will it go to 7 or 8 here on Long Island, or in places like everywhere else except California? It's really tough to envision. 10 cents cheaper won't do shit, and she should be out of office. Tell us how you really feel. Thank you very much. Yeah, but it won't do shit. Anyway, so but these are the things that we look at, and this is going to get political. We've got elections coming up in a matter of months already. So November is, right around the corner. So anyway, that's the story for today. Let's take a quick gander at the watch list for the day. Okay, let me pop myself up here. So these are the 11 sectors of the S&P 500. Technology was the winner of the day, up 4%. But if you look at this, okay, see this? I'm moving my cursor here. That is the 12-month range, 52-week range of the XLK. That's the big ETF that tracks the tech sector. It's still a little below the midpoint. So today it's a nice day, but it doesn't undo the damage that's been done. Financials are a little lower than the midpoint. Discretionary way lower. Building materials below the midpoint. Communication still near the low. That's because in the XLC, big positions in Netflix and Facebook, which are about 50% of that ETF. XLV healthcare, nothing special. Industrials have, we thought that industrials would be like one of the best things to be in this year, and that is definitely not panning out so far this year. Real estate, consumer staples, so utilities looking good. Energy looking like the best. Still slightly off its high of 80. It's down to 75. It was off a little bit yesterday too. So, if you were looking to be a buyer of the market of individual stocks or an overall passive benchmark like the S&P 500 or an index, I mean an ETF or something that tracks the benchmark, I don't think you missed anything. If you are really trying to get yourself the best possible price that you could get, you're that kind of person, you're probably kicking yourself for not pulling the trigger yesterday or Monday because you're thinking, oh, I missed the great price. But in the scheme of things, whether if you bought yesterday or today, these differences are meaningless. And in a couple of years, you won't even see these in a chart anymore because they just kind of roll off and it'll be nothing. So let's take a look at some individual stock stories. Okay. You ever heard of Bumble? I've heard of Bumble. Okay. It's online dating website, but it's up 41%. So it's up $6 today. That's a pretty good move. It's almost like an IPO. But remember, Bumble was $76 is the 52-week high. So, if you bought the stock anytime recently, you're probably still down a lot in the stock. And the fact that it was up so much today tells you that very few people were buying the stock at the bottom. So it's not like a lot of people made a lot of cash, a lot of profit on the stock. It's just that people who are down a lot are just down a little bit less, but they're probably still down a lot. Let's go back to the watch list and take a look at the some stuff. Okay, so some of the reopening plays and economically sensitive plays. UAL up 8%, FedEx up 6%. But look at the red line compared to the green. You see that? This shows you how much these are down from recent highs, and it's just like it's crazy to think that anyone could possibly say we're not in a bear market, because the Dow was down over 10% from its high. It's down a little bit less than 10% now, so it's not in technical correction territory anymore. The Nasdaq was down over 20%. Now it's down. It's probably from its high. It's probably down like 19% or something, 18, 19%. So technically not in a bear. Well, it would have to rally a little bit more to say it's not in a bear market. But from their highs, the stock, the benchmarks have recovered a little bit, but the average stock is down so much. You look at how far, look at these red line and green lines. It's like a sea of red lines. It's very few things have held up well. Very few stocks have held up well. I mean, 3M has just been, as for all recent history, has not been good to 3M. All right, and we'll take a look at some of the tech stocks. So I'm kind of scrolling around just to give you an idea of the things that I'm looking at and where I'm getting some cues from. Let's look at the FANG M stocks. Okay, we talk about these stocks all the time. Apple up 3.5%. Amazon up 2.4%. But again, it's up a lot in aftermarket trading because they announced a 24-inch stock split and a $10 billion buyback. $10 billion buyback, by the way, for a company the size of Amazon is a pittance. You're talking about a $2 trillion company. I mean, it's no big deal. Facebook was up 4%. We need to see Facebook back to like 220, 230 to feel good about it. Google, which is Alphabet, which is Google, up 5%. Microsoft up 4.5%. Nvidia up 7%. So big move for Nvidia, but man, oh man, from their highs, these stocks have such a long way to go. Okay, I think I'm going to end it there. So thank you very much for watching. I hope you got some value out of this. So just remember, oil was due to come down. Russian oil is not that big of a deal in the scheme of things for the United States. My feeling is that the rally today is not any kind of confirmation that the downtrend we've been seeing is over. It could be. We have to give it more time to see. But my best guess now is no. This is just an up day after 4 down days in a row. So eventually the market's going to go back up a little bit. Other commodities like gold, wheat have all backed off from their highs and all that. So it's just a day that people got carried away in commodities. These commodities and stocks related to commodities went parabolic, and they were due for a little bit of profit taking. I said right here on Monday that I'm doing some profit taking in the energy sector. I did some, and I'm glad I did. In a day like today, you always will think, "Oh, I wish I did more," but that's okay. That's the way it goes. We have to look forward, and we have to stop beating ourselves up over not being perfect. We just have to do the best we can. Okay, Andrew, looking forward to watching the replay. Thank you very much, buddy. Really appreciate you being here, and I'll see you guys tomorrow. Have a good night.